Today's deep dive on second mortgages. Make sure I got these in the right order. Let me share my screen again now. And we'll go through our demos. So second mortgages, very popular request. These are for primary homes. Yesterday we did investments. So for those of our property owners out there that may not want to touch their first mortgage, we have these amazing options. So typically before the last couple years, there's only been HELOC options for a customer that wants to keep their first mortgage and get a HELOC second lien. Now we have all of these cool fixed rate second lien options that have come out in the last 6 months or year or so. So these are our primary options. Most of these are full doc. I have one at the end that's not a full doc option, but full doc means basically tax returns and all that. So preferable price at this LTV. And I'm going to show the maximum CLTV, which is the combined loan to value of the first and second, as well as the lowest FICO options, and then a cool new option. So first up on the list is our fixed rate second mortgage for $250,000. It's for our primary homes, which is our topic for today, and this is full doc, and we took it to a 90% CLTV. Of course, we used the preferred credit here of 760, so we could get to that maximum LTV, but this is an amazing option here. So this is our standalone fixed rate second mortgage, primary full doc, 90 CLTV. It's a mouthful, but amazing option here. So in this scenario, property's worth $500,000. We have a first mortgage of $200,000 that we don't want to touch, and we're going to get a second mortgage of $250,000 cash out using a fixed rate second mortgage rather than doing a cash out on the first mortgage. Therefore, the blended rate is typically preferred as long as this first mortgage has a low rate, such as has been the case for the last few years. So best option here, lowest rate, 11% rate for 2.5 discount points in cost, and the lowest cost option I could pull up there, 11.75 rate for 1 discount point in cost. So some good options here. And again, make sure you do the blended rate calculation. All of our team members know how to do that calculation to make sure that adding this second mortgage rather than refinancing the first is going to equal a better blended rate than we could get on refinancing the whole thing together as a cash out. So definitely a great tool to have, and hopefully this explains a little bit more of the setup. Now let's check out a more standard or reasonable option here. So if we have the same scenario, but we take it down to 80% CLTV to get the cash out, we definitely have amazing rates here. You see the rates dropped significantly. So this is $200,000, which got us to that 80 LTV. This is again fixed rate second mortgage, primary, full doc, 80 CLTV, and we're still at the premier FICO here. So amazing options here. We could go down to 8.75 rate for 2.75 discount points of cost. And we even have an option with a lender credit. So if we go up to 9.75 in rate, we can even get a little bit of lender credit to help cover those closing costs, which is amazing. So again, same scenario here. This is a $500,000 estimated value house. We have a $200,000 first mortgage that we're not going to touch. Obviously it has a very low rate. And we're going to get $200,000 cash out for our customer from a fixed rate second mortgage at these amazing rates here, which are definitely lower than your HELOC rates. So this is where you see the cost benefit analysis of a HELOC. The fixed rate may improve the analysis here as we are able to get much lower rates on our fixed rate overall. So HELOC has a little bit more flexibility. Fixed rate is going to have a little bit lower rates, especially when we get into this preferred zone of this nice LTV here and obviously good credit. Now, if we have a customer that may have not so great credit, let me show the low credit option. So we went down to a 640 FICO. So yesterday's episode, investment property, 660 is the bare minimum. And we had to bring that down to about 65 LTV, I believe, on yesterday's show. Today, I was able to find some options for fixed rate second mortgage down to 640. So definitely recommend our customers work on the credit. Maybe we start it with this and hopefully end it with maybe a little bit higher credit and get the preferred pricing. But we do have some amazing options here for 640, which is pretty amazing. So $150,000 was the loan amount to get to there. This is a second mortgage fixed rate, primary full doc, and we went to 70 CLTV so we could unlock these options for the lower credit customers. So definitely a higher rate here, 13.799 option costing 2.75 points, and we have a 13.899 option costing 2.5 points. Again, this is a $500,000 value, $200,000 first mortgage that we're not going to touch, and we're going to get $150,000 cash out for our customer that doesn't have the best FICO score here, and we're still able to get that option for them. So pretty amazing here. Obviously, the rates and terms are going to be better as we increase the credit, and we saw the great examples for the Premier credit there. And now for my final example. This is a brand new product, just came out about a week ago. Same thing that we were talking about yesterday with the investment properties. So now we have an option that just came out to do a second mortgage piggyback. So in this example, is another mouthful here. $250,000 is the loan amount. This is going to be a second mortgage, primary, bank statement. Actually ended up being the best pricing. So this is a bank statement, 90% CLTV, piggyback purchase with our Premier FICO. So what does that mean? Piggyback means we're going to do a purchase where we're going to do a first mortgage at, I guess, better rates and terms, right? Similar idea to keeping your first mortgage if you have better rates and terms. In this case, we're going to lower the LTV on the first mortgage to get better rates and terms on that first mortgage. Maybe this customer is going to get a big bonus in a year or two and just wants a second mortgage to pay it off, whatever the case may be. But we're going to combine a low LTV first mortgage with a high LTV, in this case our max LTV, 90% CLTV, second mortgage in order to get to that 10% down, 90% overall financing for a purchase. So very unique setup here, definitely something that's new. I haven't had the chance to take advantage of it yet, as I mentioned yesterday, but there is definitely probably some investors out there or some primary homeowners as well that may need to use this. So this option's amazing. The rates are obviously amazing here. Let me scroll down and show that. So remember, $500,000 purchase, customer's going to put $50,000 down. They're going to get a $200,000 first mortgage. That's not what we're looking at here. So obviously, when you do a $200,000 first mortgage, which is only 40 LTV, you're going to get amazing rates on this first mortgage. Maybe it's a conventional loan, whatever it is, and they're able to get that. Then we're going to do our bank statement second mortgage for $250,000 to add the extra into that purchase there. So for whatever reason, if this customer wants to set it up that way, make sure you do your analysis and it actually provides benefit, but there is going to be situations such as our HELOC combo we use. Same idea here, except the HELOC combo is not going to come with these kind of rates, right? So again, that cost benefit analysis of we can accomplish this with a HELOC or we could accomplish this with a fixed rate second, and we'd actually have better rates on the fixed rate. So in this case, because we have a pretty amazing setup, we have 8.375 lowest rates we can offer for 2.5 discount points. And we can take it up to a 9.25 rate and still get some lender credits here. This is a 0.4 lender credit to help cover some closing costs there. So allows us to reduce our first mortgage and very amazing rates on our second mortgage when we do the piggyback, because we're doing two loans at once that are going to combine and combine the risk essentially, right? So definitely a unique setup, definitely a new product, and happy to share it with everybody.
All right, well, let's go ahead and wrap it up then. Remember, we do this 11 a.m. Eastern every weekday where we go through our live mortgage rates and then we do a deep dive into different loan topics. So we'll be back tomorrow with a new topic. I appreciate everybody tuning in, and we will see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.